Hey, what's up everyone? Today, I'm going to be showing you guys some key levels that you really have to pay attention to, and it's arguably one of the most important steps in starting perpetual trading, as it shows key liquidity levels that market makers look for when trying to stop people out or great places to take profit. So these key levels are really the fundamentals of every strategy that you'll ever see on ICT. So it's really important you watch this video, and let's just get right into it. The key levels to mark are the 2026 yearly open, previous week high and low, previous day high and low, previous month high and low, hour and 4 hour fair value gaps, and hour and 4 hour order blocks. There's two things we have to keep in mind though. So only mark these levels if they're within $3,000 of the current Bitcoin price, or $100 for Ethereum, or $3.50 for Solana. The other important thing is only going 14 days for your previous daily high and lows max, 8 weeks for previous weeks, and 12 months for previous months. Those will give you the liquidation levels that actually are still relevant to the current price. But again, only mark those levels if they're within the certain amount of price for the certain pair that you're trading. Make sure you screenshot this. All right, so we're on Solana just because the big three that you trade are Bitcoin, Ethereum, and Solana. You don't want to trade anything else because these have the most volume in the markets, and market makers are mostly in these coins. So you won't really get messed up on these coins. I'm just imagining that this red line is today so that you guys can see how these levels actually react later on. So let's get right into it. I like to start out on the month. So previous monthly high, is that within 350? Nope, so won't mark it. The low, no. Nope, nope. 8, 9, 10, 12. Nope. So nothing there. So let's go to the week. All right, previous week. Yep, so I'm gonna make that blue, and I like to thin it out. We'll mark this. Oh yeah, so let's name it previous weekly high, to previous weekly high. These levels aren't really relevant except for, we'll mark this for previous weekly low, and we'll mark this one. 5, 6, 7, 8. 8 previous weekly high. And now let's go to the daily. So previous daily high. We'll mark previous daily low, even though it's pretty low. 2 previous daily low. 3 previous daily high. Alright, so that's all the previous daily highs. I already checked the yearly open, so I know it's not relevant, but this is how you would check it. So you just go to January 2026, and then since it's a red candle, you start from the top here, and that's your 2026 yearly open. We are down 40% pretty much from the yearly open, so that does not matter. So now that we're done marking out our levels, we'll just head to the 4 hour time frame and mark out the fair value gaps that we see. Here it looks like we have nothing except for this one down here, 4 hour. We don't really care about the small ones here. Those usually don't matter, but we'll mark it anyway. Now we'll go to the 1 hour, look for the fair value gaps. Got one there. See, like, that's pretty small. I'm not even gonna mark that out, but I'll mark this one out. It's got these taps of liquidity in it. That's usually a good sign. That price will want to move down there at some point. Okay, now let's mark out the 4 hour order blocks. So we have this one here, this one, this one. All right, so we marked everything out here. So now just looking at the chart, we could see how these levels played out. So let's go to like the 15-minute. So as you can see, price got above this key level very well, which meant if it retested below and moved back up, it would probably go try to liquidate this level right here, which that's what it did. It faked it out. It might have tapped it, but I think it faked it out, went down, and then it finally broke through and then liquidated this one as well. And then here we see it just had the incentive to fill this fair value gap, move past these levels with strength, which indicated a bullish move. There's a bearish move below this key level, and it moved down with strength. You would expect it to retest and move in the same direction stronger, and that's exactly what it did. So you wouldn't expect that to happen, but you would want to see if that would happen so that you can respond to the move correctly. I would have looked for the retest, and then once it started going red again, you would hammer shorts. Here you could see with this key level and this key level that it didn't really move down with strength. So you got a little retest and a little pullback, but then you got the move up with strength right here because see it went past the median between these two levels. So you got a little retest and then just more and more longs. Here you could see it starting to break below slowly. You get a low, high, lower low, and then it retests on this level here and then just breaks down, down, down. So I'm not really teaching a strategy here. These levels are the fundamentals of all strategies, and you should pair any strategy with these levels, and it should really do wonders for you. And you see how right here, it just wicks below these levels and then right back up. That just shows that there was a ton of buying right here, which signifies like institutions buying and smart money. You could be looking for that move back up. I mean, you saw the strength going up here. You could have waited for that pullback, and then as soon as green started going up again, you could start longing. You don't just blindly buy things, but you just pair them with other levels and it just works out. And again, like a lot of examples here, but just one right here. You could see that it had a strong move down to these levels. It didn't fully get liquidated right here, so they moved it back up. And then once it started going red again, you could have easily just started shorting because you knew there was that strong move down that didn't fully get finished. The market makers look for these liquidation levels. That's their incentive. They don't care if it goes up or down. They just make money on the fees. They only make money on the fees. So they want liquidations. That's all they care about. So these levels are super important. I recommend you just mark these levels out every day for the next like week or two, and you will understand what I mean by these levels are crazy good and you need to take advantage of these. I recommend mapping out your levels on a centralized exchange like Coinbase because they tend to have the most accurate price action, but lighter decks is the decks that I would take my trades on and that I do take my trades on because of the fact that there's literally zero fees on their website. I don't really know why a lot of people don't talk about this website. It was just made in January, I believe, of this year. But if you sign up using the link in my bio, it does support me. It is free. You do need a VPN because you can't access it in some countries, including America. You can get any free VPN, or I'm sure a lot of you do have VPNs already. And yeah, thanks for watching.
Oh man.